The markets are closed now in Korea, and that means it's time to get some expert analysis of the stock market action and a lot more. On the line is Daniel Yoo, head of the global research team at Kiwoom Research Center. Thanks for joining us this afternoon, Mr. Yoo.
Thank you for having me.
Well, on Wall Street, we're waiting for some earnings from some of the big players, so overnight the indexes were a mixed bag. Take us through the global markets today.
Sure. If you look at the time period right now, it is a earnings season. The corporate earnings of the U.S. are coming through, and most of the numbers are coming through better than expected. In fact, 78% of the S&P 500 listed companies posted earnings per share higher than market consensus, according to the U.S. market researcher FactSet. Earnings forecast for listed companies in S&P 500 were also revised upwards since the first quarter. It is estimated that the operating profit of S&P 500 listed companies will decline only 3.9% year-on-year, versus about a month ago, the estimation was about 4.3% decline year-on-year. So, therefore, the earnings are revised up a little bit with the earnings numbers coming through. However, though, the Chinese market seems to be taking a breather. It's been going down in 2 days in a row, despite the strong economic numbers coming through. As we know, the first quarter numbers came at 6.4% growth rate of GDP versus market estimation of 6.2 to 6.3%. Most of the numbers in various economic numbers are coming through better than expected. However, though, the Chinese market has been the strongest market since the beginning of the year, rising over 30% YTD. That taking some corrections is a necessity before it takes off again with better earnings projections coming through. We believe, though, U.S. NASDAQ market will continue to do well over this period of taking breather. Main reason for that is because continuation of low interest rate environment that will result into continuation of the earnings growth for the major growth stocks in U.S. Particularly the IT segments are doing very well. And in terms of share price movement, it seems that the NASDAQ is much more outperforming the S&P 500.
Got it. Well, last week we saw the end of a remarkable winning streak here in Korea on the Kospi. How's it shaping up this week?
Yes. After the market have been reached well above 2,200 level of Kospi, Kospi is making some corrections or taking a breather. The key factor is that, though, Kospi has a cheapest valuation amongst all the Asian countries or the global scale. So therefore, despite the Chinese market taking some corrections quite heavily in the last 2 days, Kospi seems to remain intact. Kospi today was up 0.17%, and Kosdaq was flat, declining slightly by 0.08%. As I said earlier, the valuations are very cheap for Korea. It is the fair value based on our residual income models estimate that 2,300 level of Kospi is more reasonable than the current level of 2,200. Clearly, the Kospi is undervalued with a price to book of 0.9 times level. Of course, it needs some more catalyst in order for the market to go up. We believe that there are 3 factors we need to look at. Number one is the much easier monetary policy, including from U.S. and China and Korea. And second factor will be the U.S.-China dispute settlement in terms of the trade agreement. And then third factor will be the OECD leading indicator that seems to be bottoming out, and we need that number to turn around in the future. So these factors does happen, then the Kospi will probably move up higher. But for the time being, it's taking a breather.
Okay. Well, now we have to talk about oil prices. Yesterday, the U.S. saying it'll not give any more waivers to countries to import oil from Iran, and by definition, that's going to hit supplies. And immediately after that announcement, we saw prices rise sharply. Are they going to keep going up?
Well, we think that the oil price might be moving up in the short term. The reason for that is because still the sanction issues remains, and also Iran's threatening that they will close down the waterway for the shipping to the China and Korea. So if that happens, then the U.S. might retaliate in terms of using military actions. That could result into higher oil price if that happens. I think that most of the people are taken by surprise that the Trump administration have said that it won't renew any waivers in regards to the Iran oil purchases. So that is affecting clearly the prices of the oil. Yes, if the price continues to go up higher to $70 level or even higher, that will have negative impact globally with the higher energy prices, and that will increase the inflation numbers, and which means that the central banks cannot lower interest rate because of the inflation worries. However, though, we think that the production level that will come in much heavier from U.S. side with the shale gas production. Also, the Saudi Arabia as well as the UAE have said that they will increase the production capacities, production numbers, will allow the oil price to probably go down in the future. We think that U.S. have ample room to increase the production and be able to control the oil price at a much lower level than current prices. And because of the break-even point of the shale gas companies are probably around $40. So anything above 40, well above 50 is a reasonable number for U.S. to continue to keep having a competitive edge relative to China. So oil price remaining low is an important issue. We think that the oil price will settle down probably towards the second half of this year.
Okay, we'll keep watching that number, of course, but that's where we'll have to leave it today, Mr. Yoo. Thanks, as always, for your insights.
Thank you very much.